welcome to the Week in Review, the show that brings you up to date on the week that was. Here are the top stories. State Bank of India's profits shoot up, inflation accelerates in April, and a new study sounds a warning about chronic diseases. First up, India's biggest lender has seen its profits soar in the fourth quarter. After struggling for months with bad assets and a thinning capital base, State Bank of India has rebounded dramatically. Net profit rose 24% to 4,050 crores compared to the previous quarter, and its loan book increased 14.5% to 8.68 trillion rupee compared to the year-ago period. SBI's profits are not comparable on a year-on-year basis because it incurred large one-time costs in the previous year's fourth quarter. But most other indicators were up as well. The bank's net interest income jumped 45% to 11,704 crores, but its net interest margin fell to 3.89% from 4.05%. On the bright side, net non-performing assets dropped to 1.82% from 2.22%. And SBI's provisioning fell to 2,836 crores from 3,263. And moving to the economy, India's rupee was battered all week, repeatedly falling to new record lows. Worries about the economy at home and the Eurozone crisis kept the currency weak despite suspected RBI intervention. Still, the rupee recovered some ground late in Friday's trade to end at 54.44 to the US dollar. And staying with the economy, inflation has accelerated in April with prices of key items across the board going up. New figures show the wholesale price index rose 7.23% in April compared to the same period last year. In March, it stood at 6.89%. Inflation in India remains persistently elevated despite slow growth and high interest rates. Much of the latest spike was driven by food and fuel prices. While manufacturing inflation for April rose just 5.1%, that for food jumped up 10.5%. The situation with fuel and electricity was even worse, showing an 11% rise during the month. And in other news, private companies could soon find it much harder to acquire land for their projects. On Thursday, a parliamentary panel recommended strict rules that would not allow the government to acquire land on behalf of others. The panel said all for-profit ventures should have to buy land in the open market. It added that agricultural land should not be acquired, and also said that there should be no exceptions for infrastructure, mining or SEZs. The parliamentary committee's proposed rules are much stronger than those in the 2011 Land Acquisition Bill, which exempted land acquisitions under various existing legislation like those for highways and SEZs. Switching back to corporate news, Piramal Healthcare has announced the largest overseas acquisition by an Indian firm in about 6 months. On Wednesday, the company said it was buying US-based Decision Resources Group, a provider of healthcare information. The deal is worth $635 million. Piramal Healthcare's latest deal is in line with its strategy. Promoter Ajay Piramal has been trying to diversify the company for a couple of years now. Back in 2010, Piramal Healthcare sold its local formulations unit to American firm Abbott Laboratories for $3.7 billion. And here are some stories in brief. SKS Microfinance is counting on new legislation to revive its fortunes. On Thursday, CFO Dilli Raj said the new draft microfinance law would help the company recover loans and stem its losses. SKS was devastated after a 2010 ordinance in Andhra made it difficult to recover debt from borrowers. India's former telecom minister has finally walked out of prison. On Tuesday, a special CBI court granted a bail to A. Raja. Raja was the very last of the 14 accused in the 2G scandal to seek bail. He was behind bars for 15 months. And finally, a new report has sounded a warning about the rise of chronic diseases around the world. The World Health Organization's annual report says 1 in 3 adults around the world has high blood pressure, which is a leading cause of heart disease and strokes. Worse yet, it says nearly 80% of such deaths now occur in developing countries. And that's all we have for you. Thanks for watching.